as well to say hello to you, and we will take it as it comes. But let's talk about the primary market action. Senco Gold, the largest organized jewelry retailer in east of India, has approached the primary market with nearly 405 crores in terms of a public issue, which is a 135 crore offer for sale by private equity firm SAFE Partners. Suvankar Sen, who's the CEO at Senco Gold, and Sanjay Banka, who's the CFO at the company, both of them now join in to tell us more about the firm's post-listing strategy. Thanks a lot for joining in, gentlemen, and welcome to the capital markets as well. Sanjay, coming to you first, what exactly are you likely to grow at going forward? The street wants to know that, and your margins expect. What is the expansion strategy for your margins? Because as compared to peers, while your margins are in line with, say, something like a Kalyan Jewellers, it's much lower than the largest player, which is Titan. What's your growth and margin expansion strategy going forward?
You're asking me?
Yes.
Yeah. So our margin has been very stable. Last year it was 15.7%, and this year the margin has grown to 16%. Actually, our margin is a blend of own store, franchisee store, and our e-commerce business. So if you look at our own store margin, they are in the range of 20%, much superior than the other competitor. So given our 10% stud ratio, own store margins are 20%. But when you look at blended, it is 16%. That's why we say that now, since our company is new and we have got a major business, a franchisee business, look at our return on net worth ratio, which is almost in the range of 19% for last 2 years. So at 19% return on net worth, we are number 2 in the industry in terms of capital efficiency and profitability. Gross margin is basically dependent upon the stud ratio and so on. So kindly look at the return on net worth, which is number 2.
Okay, all right. But Mr. Sen, just coming to you, you're getting currently almost 90% of your sales from gold, whereas the studded as well as, diamond and semi-precious is around 6 to 7% maximum. Does that ratio change going forward, considering that the margins would differ for both the businesses as well?
Yes, it does. While we are at about 10 to 11% in terms of the studded ratio, but if you look at the past, at Senco Gold and Diamonds, we've been growing in double digits as far as the diamond jewelry sales is concerned. Last financial year, our jewelry sales growth for diamond jewelry was 35%. The year before that, around 20-25%. So what we see, with the increase in gold prices, consumers today, maybe because the way the trends are changing, the Western wear coming up in a big way. So people are also looking at daily wear, everyday wear jewelry, and in which diamond jewelry plays a big role, and the sales are picking up, which in the long run, we feel that will really add to the bottom line. At the same time, in terms of the focus that we give in terms of product development, diamond jewelry plays a very important role. And 14 karat, 18 karat jewelry makes it much more affordable for the consumer. So as we look at the consistency of financial performance that we've been having over the last few years, it is largely by the fact that gold jewelry is growing, but diamond jewelry is growing at a much faster rate. And that is the good sign that we are seeing in the industry.
Yes, we see that with your diamond jewelry contribution from 5% going all the way up to closer to 7%, but that's also coincided with your ad spends increasing over the last 3 years as well. We'll talk about that in just a bit, but I'll go back to the financials once again. While your growth has been phenomenal, for the last 2 years, it hasn't been, congruent with the kind of operating cash flows that you generate. In fact, the last couple of years, your operating cash flow has been negative. Can you give us a sense of when do you turn positive into operating cash flow, and when does that excess inventory liquidate?
No, it's a very interesting question. See, operating cash flow which you are looking at is an optical issue. So in terms of our accounting, the gold metal loan which we take, we are showing that as a financing activity. And all other jewelers are showing this as a part of operating activity. So if we move it to the, as per the disclosure norm of other players, our operating cash flow will optically look positive. And in actual also they are positive. See, look at our PAT last year, which was 160 crore. And let's say a depreciation of around 30 crores, 190 crore minus dividend of 9 crore. 180 crore is the operating cash flow positive. Now it is for us, how do we deploy that? So we have been deploying our operating cash flow effectively and very efficiently in existing store and new store. Now in existing store, we have deployed not more than, let's say, 150 kg around, let's say 90, around 20 to 30 crore. Balance all has gone towards expansion. So what we want to say is that our operating cash flow is very positive, which is helping us to grow year on year by 5 to 6 stores per year. And that's how we have been consistently growing for the last 6-7 years, because we did not have any third-party funding other than the OG funding last year of 75 crore. So all the growth in the past is primarily based upon the operating cash flow and the balance sheet leveraging.
Okay. Mr. Sen, one of the reports that I was reading is that online sales of jewelry has far surpassed and is expected to surpass brick and mortar sales. Currently, how much do you probably generate from online sales, and what is the strategy there? Can you give us a sense in terms of what it would be as a percentage of total sales? And that would probably also give you coverage pan-India as well.
Right. No, so Ekta, what the report that you must have read, it's like a very futuristic report. What we see at Senco is the fact that online jewelry sales is up to 2%. Our average ticket size that we sell is around 60 to 70,000 rupees. If you just divide the total turnover of 4,000 crores, we have about 5.5 lakh transactions throughout the year. So you can just imagine that the average ticket size being 60 to 70,000 rupees in terms, if you back calculate in terms of gold, it is around 7 to 8 grams of gold. So that is the upper middle class section of the Indian consumers that we are addressing. And what we have seen in our own online model is that the products selling there is 20 to 30,000 rupees approximately. And there's large quantity of bars and coins, which are more standard products that are being sold online. So we believe that online as a tool or a model will become such that the consumers will look at the online websites, the social media, look at the designs, appreciate it, take a decision, and then finally come to the store and then finally buy it. So this is how, if you look at our peers, our fellow jewelers who have come, who even though they have begun their journey online, finally the growth has really come up when they have opened their own physical stores. So it's a perfect blend of your offline model and the online model in terms of creating customer touch points that will actually create a difference in terms of increase of sales.
All right, Suvankar, now quickly some rapid fire numbers if you could give us. You are roughly close to around 4,000 crores in terms of sales. What is your long-term sales growth target? You have 136 stores as of your red herring prospectus. What is your store expansion target, say 2 to 3 years from now? And also your 70% revenue coming in from West Bengal. Do you think you will still remain a strong regional player? What is your diversification target? So revenue, diversification and store expansion.
So, Mangala, very honestly, we will not be able to talk too much about the future. But if you look at the past, if you look at the CAGR growth we've been having over the last 4-5 years, it's been about 20%. More things to look at is when I joined business in the year 2007-8, it was the turnover of the company was 134 crores. In the last 15 years, from 134 crores to 4,000 crores, that is a 30x growth in the last 15 years, where the turnover from 134 crores, we are doing a PAT of 157 crores. So you can see over the last 15 years journey, this is how we have grown. And we believe and we pray that we continue to grow in the same range. In terms of number of stores, if you look at it, every year in the past, we have added about 5-6 company-owned, company-operated stores and around 4-5 franchisees. So that is like a 50-50 ratio of owned stores and franchisees. And looking at the past, you could say that that is the minimum that we could continue to grow in the future as well. One single store for us takes about 16 to 18 crores in terms of the inventory and 1.5 to 2 crores in terms of the capex. So that's the kind of investment would need to open a stores. With the money that we raise, it's mostly for working capital, the 270 crores. So that would be used for store openings, and then that would be the company-owned stores, and we would really look forward to having more and more participation from the franchisees who would like to be a part and a partner of Senco. And as far as the third question, Mangalam, you had said, what was it about?
Franchise. Diversification outside of West Bengal.
Yeah, diversification outside of Bengal. So if you look at it, the East India is about 80%, North India 15%, and the South and West is 5%. So going forward, we would like to continue to be in a similar pattern, maybe 5% here and there, because we are quite conscious of the fact that which is our strength, and leveraging the strength, the low-hanging fruits, ensuring the return on capital of the funds that coming of the investor should be utilized and the assets be allocated in that wise way, so that the return on capital that we are getting for the last few years continue to happen in a similar range. So this is how we would look at the future.
Okay, all right, Mr. Banka as well as Mr. Sen, we're going to leave it on that note. Thanks very much for joining in and speaking with us. We will definitely touch base with you once there is a listing that goes through, and we will be able to discuss more forward-looking numbers. Thanks very much for joining in. Need to take a short break. Up next, we'll be discussing technicals of the market with Shilpa Rao. Stay tuned.